Yeah, there we
You
go.
ready to
That's
go?
better. That's better. There. Everybody see
Perfect.
that now?
Okie doke. So, again, thank you for everyone that's on our webinar today, titled What's Going On in Real Estate 2021. I'd like to introduce to you our speakers today. As I mentioned, my name is Shada. I'm a business development manager at Patelco. I've been here for almost 4 years, helping all of our partners and their employees achieve financial success through webinars and educational pieces. Peggy Wyman is also on my team, and I've had a pleasure working with her here for 2 years, and she's been in banking for, gosh, over 25 years. And Nicole Poole's been here for almost 3 years. She is our external home loan manager. She oversees all of the different branches that support all of our members. And then Norlene de Mesa, she is one of our partner agents through Home Advantage, which I will explain to you what it is. There's a lot of benefits for our members. So the agenda today, what we're going to be discussing is what's going on in real estate. Is there a bubble? I've been getting asked a lot of questions. What happened in 2008? Many of you may have been, gone through a lot of different hardships, losing your home. We're going to explain to you. Are we going to have a bubble again? Are we on that same road? Is it something different? And Nicole, our expert, is going to break that down very easy. She has a magic ball she's going to look into and determine everything. So we're going to talk to you about the real estate. What's going on? Why is there so many shortages of inventory? Why are people moving, shifting around so much everywhere? What's causing our shortages, things like that. So we're going to break it all down for you. And then also, we're going to explain to you the financing piece of it. Why is there so many people refinancing, pulling equities, pulling home loans, things like that? How did the pandemic affect all of that? And then I'll also later on introduce you to who's on our team. Aside from your presenters today and moderators, we have a large team of different experts working under the Patelco umbrella that can not only help you with your home purchases, home loans, things like that, but we have a variety of different products and services that we can definitely provide you help. So I'm going to move the mic over, I guess, to Nicole Poole. She's our wonderful external home loan mortgage manager, so that she can talk to you a little bit.
Thank you, Shada, and thank you everyone for joining. I see 63 participants, including us. So this is great. This is fabulous. Hopefully I will be able to impart some information as a overview of what's happening in the market. We were talking about this, and we really wanted to provide you all in the audience some information regarding all stages of homeowners, buyers, renters, because we know that not everyone on this call is a homeowner. So we kind of wanted to cover what we're seeing and the challenges we've been facing. So this question, is there a bubble? Norlene and I were talking, and she gave me this awesome slide. It's not a bubble, it's a lack of supply. It feels like a bubble, but let's kind of talk about that a little bit. A bubble is really created by a run up in the housing prices, typically fueled by demand or speculation, which is like investor speculation. Prices are low, investors come in, buy up these properties. That creates more demand, and then the market is full of overpriced housing, which is what we saw back in the Great Recession in 2008. These houses were worth less than what borrowers owed on them, so they started walking away. That's not the case today. Today is different. You might see headlines saying, "Are we in a bubble?" It's really the lack of supply, and we'll talk about why that is. The limited supply that we have can be replenished. The problem that we're seeing right now is it's taking a lot of time for that inventory to be built, right? So that's also affecting our situation. They can't build properties fast enough for us. We have a lot of buyers. We don't have a lot of inventory as far as new construction. So what you're seeing is resale. We're seeing people, moving out of their homes and selling and moving on to.
Hey, I can't. Can you?
Sorry, I thought we had some interruption. So the other thing about, are we in a bubble? There's a lot of things that are different today. We've seen home values in the US increase by about 17% to a median home price of $329,000. Now that may seem like a weird number to all of us because we're used to hearing, these very large housing prices. But remember, it's the United States as a median. Median is 50% or higher and 50% or lower. So that's a median, not an average. The other thing is population has increased dramatically since 2008. About 25 million more people are in that buying range age now. So that creates more demand, right? And then as we talked about before, housing inventory just doesn't exist with the new construction right now. The other thing that we're saying it's not a bubble. People have more savings today in their bank accounts. We've been really on a savings journey for the last 10 or 11 years, especially if you've gone through that recession. We aren't using our houses as bank accounts anymore. Even in being in lending I've been in lending since 2003, and I am surprised that we are still not seeing a lot of people use their homes as banks and buying toys, and they're really using it for remodeling. They can't find the house of their dreams, so they're actually remodeling their existing home and making it their forever home. So people have more savings, more equity in their homes. Interest rates are still low. When I started in this business, they were like 6%, which is still pretty low. Today, you're seeing sub 3% on a fixed rate loan. So they're more affordable. More homeowners would be prepared for any trouble. The other thing that we really have to focus on is things have changed pretty dramatically since 2008 as far as housing regulations. We are not offering those 100% financing, interest only, pick a payment, stated income, no asset loans. Those don't exist anymore. So there's no like predator mortgages or exotic mortgages out there that are causing that, that demand and that easy entry for someone to buy a house with no skin in the game, what we call it. And that's, that again, it's lack of supply. And Noraline has some good information about the lack of supply as well. So in the long run, it may take 5 to 10 years for the housing supply to increase enough to meet our current need. But guess what? Has anyone bought lumber lately? My sister's husband is a home builder contractor. They're building a house in Northern California, little tiny 1,200 square foot house. They said the cost of a piece of plywood has gone from about $20 to $90. So if builders are continuing to build, guess who's going to have to pay those increased costs? It's the buyer, right? Or they're going to stop building because they're not going to be able to make profits from these homes. So that's what we're seeing now. We're seeing a lot of things happening in the economy that's making it more expensive to build homes. Gas is increasing. How do we move lumber and supplies back and forth? And just this cost of lumber has been really dramatic. So that is a constraint as well.
Nicole, I have a few questions. Do you mind answering, please? I'm going to read you the first one.
If I can, yeah.
They're pretty easy. I know we went over this, but can you, in a nutshell, explain what a bubble is, please? That's the first question.
Sure. So what is a bubble? A bubble is when a real estate bubble, we're talking real estate bubble, because you may hear student loan bubble or, consumer loan bubbles, but in a housing bubble, it's a run up in housing prices fueled by demand, right? That demand, that supply and demand, speculation, which is what we call usually investor speculation. They're going to buy real estate because they see that values and prices are going up, so they're going to make some money, right? It's like an investment. And then exuberant spending to the point of collapse. So the bubble, and then the bubble bursts. So what we're trying to say is we had a bubble back in the 2008 recession. We do not see that that's happening now. We see that it's simply a lack of supply in the new housing or new construction starting.
Okay. And then thank you for that. The second question is there an inflation? What is going to happen in the next 2 years? So maybe this is where you take that magic ball out.
Say what? If there's inflation, what's going to happen in the next 2 years?
Exactly, yes.
So I'm not an economist, and I'm not, I'm probably not the best person to answer that question. But what we are looking at is we're forecasting, and I think I have a slide on this. It's this one, and the economists at Fannie, Freddie, Mortgage Bankers Association, and the National Association of Realtors, they forecast that median home prices will rise, but that rates will stay low. So in the housing economy, that's what we're banking on, right? And that's what we tell our members if they were to ask that question. What's going to happen in a couple of years? I mean, I don't have the crystal ball. I wish that I did. I would be rich, right? But real estate and interest rates are largely dependent on microclimate, your microeconomy, macroeconomy, your county, your state, the nation, and global. So it's not just, oh, we're going to set a rate today. It's really impacted by what's happening in the world and the economy. So, because of the pandemic, I'm just starting to kind of read about things that are going to affect our economy down the road. Even though we feel like we're coming out of it, what about the businesses that have closed? So we really don't know, but we're expecting that rates will stay low. The Federal Reserve does not want to start raising interest rates right now.
Okay. And then someone asked about if this is when we're going to share the link. I will have the link shared before end of the week for everyone to view. And then lastly, I have Leo. He says, my contractor has indicated that Home Depot has increased all building materials. Interest rates will increase by the feds. I don't know if that's not a question. And then how much do you need for a down payment? I've seen 3%, but how much cash are people putting down?
Great question. And that's when we talk about skin in the game, the difference between, the previous financial implosion was 100% financing. Like, I don't need to give you any money. So that has really evolved today. There are still loans that you can put a minimum of 3% down. Patelco actually offers those loans. Those are going to be lower loan amounts, right? So you may not be able to find the right house. You may be able to get a starter house. It depends. 3% down. Patelco does a 5% down up to $1 million. I love this product. I am really impressed by Patelco's willingness to provide high value or high dollar loans in this market, because this is where we're from, right? We're from the San Francisco Bay Area, and we talk about the average first time home buyer house is like $1 million, and that's crazy to some people. So 3% down is your minimum on certain loans. Then you have the 5% down up to $1 million. And then it depends on loan amounts. As you're getting into those higher dollar homes and higher loan amounts, the down payment is greater, 10% to 20%, depending on your situation, what you're looking at as far as price, and then your credit score, because the risk is greater as the loans get larger, of course. Hopefully that answers your question. And we can certainly give you more information, or I can even talk to you personally after the call, and we can go through your situation.
For sure. And then I have another message sent to me, 2 more questions, and then we're going to move to the next slide. It reads, once interest rates go up due to inflation, wouldn't that be better time for savers to buy? Higher interest rate environments suit savers, while low interest environments suit borrowers?
So, well, higher interest rates, I mean, it would only make sense if higher interest rates happened and the price of homes went down, right? What you don't want to see is home prices continuing to increase, which they've done, and interest rates increase. You also have the savings side of things. As interest rates increase, savings rates increase. So there's Patelco's business model is we take in our members' money and we lend it back out. So our specific circumstances that we also have to pay you as our members dividends from your savings and be able to give you back, low rates and low fees. So that question, it's in a buyer's market. you have more inventory and prices are lower. The rate is not necessarily the driver unless you're being priced out because of the rate. I hope I answered that question.
Okay, and then the last question is, does Patelco provide loans on investment properties?
Yes. Now, the funny thing is, in this environment, our investors who are Fannie Mae and the big ones, Freddie Mac, have really scaled back on wanting to do investment in second homes. So what do? They increase the price of those, right? You kind of price it out of the market. So if we do investment loans up to a certain loan amount, which is the conforming amount in your area, however, they're going to be pretty expensive. I priced a loan yesterday this is like the most expensive situation you can get yourself into when you want to do a loan is investment property, 4 units, cash out. It was 4.25 points, which on her loan amount would have cost about $23,000. Wow. So the interest rate would have been 3. If we rolled those points into the loan, she would have had to pay 5.5%. So you can see if it was her primary residence, it would be 3 with 0 points. Because it's an investment property, it would be 3 with 4.25 points or 5.5. So that's the issue, is they're pricing those investment loans in the second homes based on the fact that they really don't want to do any more of those. They really want to focus on affordable housing for people, right? Not investors. We're not an investor-based lender. We're a residential lender. So that's the difference. If you want investment properties, you can still get them, but they're going to be expensive.
Absolutely. That's the last question. And I'd just like to let you know, we are going to have a Q&A at the end of our webinar for about 15 minutes to answer more questions. So I'm going to give the floor back to Nicole to continue on our webinar.
So you probably read this. We talked about this one. Shayda, it's your turn again.
Oh, it's my turn. Wonderful. Okay. So
well, I'm sorry. We probably have these slides backed up, but I can just explain to you real quickly about our Home Advantage program, and then Shayda can take on the next slide. I apologize for that.
No worries. No worries. Go ahead.
Home Advantage is a strategic partner for credit unions in the nation, in the United States. And I've worked with Home Advantage since 2003. I've actually sold 2 of my houses with a real estate agent through Home Advantage. And it's a member benefit, probably one of the largest member benefits that we offer. If you register with the program, we can match you up to an agent in your area. These are agents that we don't hire. We just partner with them because they are great partners, right? They're great agents. They can help you buy, sell, search for a home using the Metro listing or the Bay Area listing, active listings. And the great thing about it is you can earn a cash reward to use to offset either closing costs or get a check in the mail, which comes from the agent. By being part of the program, if you buy a home or sell a home, they will give you a cash reward back from their commission. So if you're interested in that, we have a lot of information that we can pass on to you. And now I'm going to give it to Shayda. Thank you.
Wonderful. Well, I have the pleasure of introducing to you our partner agent through Home Advantage, Ms. Norlene De Mesa, who is an amazing agent representing all over Northern California. She brings a lot of expert advice and experience in real estate. So Norlene, I'm going to give the floor to you. Welcome to our webinar, and thank you for joining us and sharing your advice.
Thank you. Thank you so much, Shayda. Thank you so much, Nicole. I actually wanted to talk briefly about several things, current things that Nicole mentioned regarding the challenges in the market and strategy. But a little about myself. I have been in the business for over 18 years and started my career with a large brokerage, and we're extremely honored to now be a partner with Patelco Credit Union. I do live in San Francisco. I bought my first home in Elk Grove, Sacramento, spent my high school years in Pinole, and a few years ago, I became a broker opening Clarin Realty, and have seen and lived through the previous real estate cycle that we cautiously refer to a lot. and challenges in the market. I know the pandemic has sparked a rebound in residential migration as people work from home and reevaluate their home life work balance needs. And as a result, buyers face some challenges in getting priced out and getting an offer accepted. Um, as Nicole mentioned, the demand remains strong as properties don't stay on the market for very long. We're talking about 18 days from listing the contract versus 29 days a year ago. And actually some less days in some other neighborhoods and cities. Couple that with the lack of inventory, referencing, for example, for the inventory levels in single family homes in March was 900,000 versus last year in March was 1.3 million dollar 1.3 million units. So obviously the lack of inventory is there, and most buyers, when you're looking at the price of a property and think, you automatically think, okay, how much over do I need to bid on this home to get it? And that can be quite exhausting at the same time. So it's important to have strategies in place to help. And some of the ways of getting an offer accepted obviously requires teamwork with both lender and the realtor. So we need to strategize your offer. And our job is to be able to determine what it would take to get the home that you want within the parameters of your financial approval. With that, I want to stress, since we would need to potentially act fast, because obviously the days on market are less now, it's important that you do get pre-approved. It's also important to decide, for example, in most cases, if your maximum purchase price is $1 million, do we need to look for homes up to 850,000 to allow you the room to negotiate? How aggressive do we need to be with our terms and contingencies? Can we minimize those days, or should we increase our initial deposit to make an offer stand out? Or is there an offer date, or can we make a preemptive offer? So all of these potentially help in getting your offer accepted. And once your offer is accepted, Home Advantage partner realtors like myself can continue to help. As was mentioned, our partnership with Patelco Credit Union allows us not only to be a resource and help you get your offer accepted, but we provide a 20% rebate from our commissions to help you defray some of your closing costs. Closing costs or additional out-of-pocket expenses aside from your down payment could be, it includes escrow fees, title fees, prorations, all calculated through escrow, which is roughly about 2% of the purchase price. So the 20% will apply to that. So for example, if our commission is $10,000, we either, we give you a credit back of $2,000 towards your closing costs that helps defray that. In addition, the 20% will also apply when you sell your home with us. And it will provide, and we provide you with marketing and staging, as well as assist you with coordinating or arranging some repairs and prior to staging your home, also known as a concierge service. So what additional expectations can you expect from a Home Advantage agent? Aside from that rebate, with all of the information available online, it's important that we help you make sense of all of it. And of course, I'll help you navigate through the disclosures so you can better understand how to read through them, and most importantly, advocate for you to buy your home at the best price possible. So basically, we'll help with all of this because we're local. And having a local professional, local lender who are experts in the area working for you is really the best way to make things go smoothly. And we do hope to be able to continue to be a resource and help you in the future.
Wonderful. Norlene, before we move on to the next slide, which Nicole is going to present, there are some questions that are coming through, and perhaps we can try to answer them to the best that we can. One of the questions comes, it's asking, what's the average cost of a condo in the Bay Area? Is a good condo a good starter home investment? What are your thoughts?
That's a perfect question to use San Francisco as an example. The San Francisco condo market, in my opinion, has been affected by the pandemic. And so a lot of the people who previously have been outpriced and didn't think they'd be able to live in San Francisco are now looking at the condos in the city. And for example, I had a client who we purchased a 2-bedroom condo in Alamo Square, Hayes Valley for $850,000. And that's something that has not happened in a long time. So to directly answer your question, is it a good starter home? My answer would be yes, because I'm all about location versus real estate, right? Location versus the home. You can change the location, but you can change the way you can change the home.
Absolutely.
Want to be in San Francisco, I think, and you didn't think you'd be able to afford it. I think a condo would be a great starter in this right now.
And if I can add too, is again, going back to Patelco being born in San Francisco and raised in the Bay Area, we're very comfortable with these San Francisco properties. We're comfortable with the non-warrantable condos that have maybe, very basic litigation happening, or that they're new and they're only being able to be financed through the builder. So we have programs that are in our portfolio built for these unique properties. We also we're one of very, very few lenders that do TIC lending, tenant in common or fractional lending. I brought this product from the Bay Area to Patelco because we really saw a need for this entry-level housing in San Francisco that most lenders would not lend on. And they're beautiful homes. They're homes that have been fractioned into, or a building that's been fractioned into single entity ownership. So things like that, where, if you're looking at a property and you might find that there's some difficulty getting traditional financing from a well-known lender, that's something your credit unions can usually help you with, because we do lend from our portfolio as a direct lender.
Thank you, Nicole. So someone asked, what is the name of your company? I just want to address that. So anyone that is in the market to apply for a home loan, or to purchase or to sell their home, and you're a member of the credit union, we partner with agents through Home Advantage, and we have a site available on our landing page, Patelco landing page, which can give you more details by entering your zip code, things like that, to find out who is that agent in your area that can further assist you. So the services are the same across the board, whether you're using Norlene or anybody else. I hope that answers the question. My goodness, everyone has questions. There's 4 more coming in. Let me see.
Engaged. I love it.
Wonderful. I love this too. So let me make sure I didn't miss anyone on the top. What rates do we offer for refinance at no point with great reports? I think that one, if you can just shoot myself or Nicole Poole a direct email, maybe Peggy, if you can take that, and we'll address them individually, their question. And then let's see the next question. How easy or difficult is it to purchase a home in foreclosure?
So that depends. It really depends. If it's in foreclosure and it's a real estate owned property, then you're dealing with the bank as the seller. If it's a short sale and the buyer is still, in that process, and they've agreed to do a short sale with the lender who typically owns the loan, it might be a timing issue. Usually those REOs, they're very rare, and you can ask Norlene. I don't know that there's a lot out there that are listed. Patelco does not have any real estate owned, which means members have foreclosed and given us back the property. Going through that process with agents years ago, it's typically you have to deal with a specific agent. You have to go through different types of processes, submitting a highest and best offer, and then they want you to, use their own lender. It's not that much different, but they're not that prevalent today. We may start seeing those later on because people are maybe having difficulty from the pandemic or with their business deciding that, they do need to do a short sale or foreclosure, but we haven't seen that.
Okay. Nicole, does Patelco give loans to build brand new homes?
But at this time, Patelco does not do new construction lending. We have a construction builder program, which helps you buy your house with the builder, but the house is finished at that point. So no, there are other lenders I can refer you to in the area that do construction lending. It's a totally different process. I've been involved in that, and it's it's a long, tedious process, but it does exist, and we can help you find someone that can get you the right product, because there's a few different products in the construction space.
Okay. Someone's asking, do you think we'll ever open any branches in the North Bay Vallejo area? ? Well, I'm going to address that question. We have recently launched virtual branch, so we're pretty much anywhere. You can just log on and click a link, and the virtual branch is pretty much like as if you're in an office with a direct specialist, whether it's, you're looking to speak to a loan officer, whether you're looking to speak to financial advising, opening up accounts and stuff. All of that can be done through virtual banking. I will provide more information to you directly in your email if you'd like. But hopefully, we just recently this week, a couple of days ago, we opened a new office at Bishop Branch in San Ramon, where our goal is to grow all over the Bay Area. We do have 40 locations, and hopefully one of these days we will build a location in Vallejo. I know we do have an office in Fairfield, which is not too far from there for the time being. But virtual branch is easy access Monday through Friday, 10 a.m. to 4, as well as Saturdays 10 to 2. And I will definitely email that to everyone as well. Oh my God. Should we continue? Question how does one complete? Okay, question. How does one complete with buyers coming in with cash on hand in comparison to a conventional loan?
Say that again?
How does one compete with buyers coming in with cash on hand in comparison to a conventional loan?
Norlene, you want to take that one?
Yeah, so that's actually a most common question, and that goes back to what I was referring to with the strategies in terms of contingencies. The way most people compete with the reason why a seller wants to accept an all cash offer, they feel like it's a sure thing first and foremost, right? So to compete with that, you minimize your contingencies, and with partnership with the credit union and getting pre-approved, they'll be able to let us know, one, can we close sooner? Can we close in 25 days? Can we close sooner than 30 days? Can we minimize our contingency, our loan and appraisal contingencies from 21 days to maybe 10 days? So a short answer to that would be to minimize and maybe waive inspection contingencies. I do want to caution when it comes to waiving contingencies. For example, if you make an offer that's completely non-contingent, you're basically letting the seller know that you're going to buy the home no matter what. So if anything, for whatever reason happens, if the appraisal value comes under, or something happens in your finances for whatever reason and you can't close, you will lose your earnest money deposit, that 3%, 3% of the purchase price that you normally put into escrow. So that's one caution that I always tell all my buyers. But that's really the answer, is you minimize your contingencies is how you compete with them.
Next question, does Patelco refinance properties for which the HOA is in litigation with the builder developer for common area issues only?
Yeah, that's under our non-warrantable condo guideline. So we have done those. If the property's in litigation and as a lender, we're determining that there's no risk as far as health and safety and it's a common area, then that would be something that we would do or could do. I mean, we would still need to look at the condo questionnaire and the condo documents in the property, but we've done them.
Okay, does my property tax go up if I put a small unit in the backyard, maybe for office space?
If it's, well, permits are what red flag the county to do a property reassessment. And that's not really my area of expertise other than, you know, basic understanding. But if it's an accessory dwelling unit, that's different than like a shed that you're buying at, you know, Home Depot or something and adding on. You know, there's the shed, which is not going to be affixed to the property as a permanent on a foundation as permanent property. There's an accessory dwelling unit that could be that could trigger a reassessment, and then there's, you know, adding square footage to your home, which definitely does trigger
an assessment, probably.
reassessment.
Yeah. How does it work if you have a VA loan you want to use to purchase a home? Should that be a one-off?
Yeah, I'm not a VA expert. I'm a conforming conventional financing, but we do have a partner, another strategic partner who helps us with government loans because we know our borrowers and members need them. I do have a contact for you that can help you, but I also would defer to Noraline on the difference between VA conventional, government financing conventional when it comes to making offers.
Yeah, to my understanding, again, I'm not that familiar with VA loans because I haven't really done them very much here in the Bay Area. But to my understanding, VA loans and FH loans are similar in a sense that they're government insured, right?
Mm-hmm.
That's my understanding. As far as making offers with VA and FHA, I think at the end of the day, it takes a willing seller to be able to fully understand that and fully accept that it's essentially a lower down payment than, say, somebody with a conventional with more down payment.
Nicole, this question's for you. How long once pre-approved, how long does this last in duration before you have to get pre-approved again?
It's typically 60 days because at the end of that 60 days, things start to expire. What I tell people is if you are, you know, if I'm giving you a pre-approval letter and you're going shopping, don't buy anything, don't charge, you know, stuff on your credit card, don't buy a new car, don't quit your job, you know, if just like be in a vacuum for a little while. If, you know, and then we can usually just update that pre-approval letter with an updated pay stub, or we can update your credit report. So I've had people that have actually been in a pre-approval kind of limbo state for up to 5 years. They're, you know, I mean, long periods of time. I mean, that was, you know, very few, but 6 months, a year, it's not uncommon for someone to stay in that pre-approval status for 18 months or more, especially now in this market. And Noraline, I don't know that you talked about, you know, offer fatigue, but what we're seeing now is people are making multiple offers and they're just saying, forget it. They're not getting anything accepted. And they're like, I'm just going to step back and wait. So we will help you stay pre-approved for as long as you want. It's just a matter of the documents expiring.
Right.
Yeah.
So I'm going to take one last question before we move on with our webinar. Someone joined a little bit later, and maybe you can take your magic ball out for this question, Nicole.
I got it.
So they're asking, how do you see the near future of real estate market trends? Prices have really jumped up a lot recently. So give us a prediction.
So, in the near future, I think that you're going to continue to see real estate prices increase. Again, because we just do not have the supply for these willing buyers. And we're hearing what's called, spending rage. Like people just want to spend the money that they've saved over this last year. I know I have. So as long as you see low rates and housing prices continuing to stay stable or go up, you know, I think we'll be in this market for a little while longer. I think some signs are, and Noraline can attest to this, is values coming down or days on market going up. if you start to see property staying on the market for a longer period of time, if you start to see counter offers coming down, those are all signs. But I think we're in this kind of market for a little while longer, because again, we just cannot build fast enough to have the supply. Is it 6 months of supply on the market, Norlene? Was that the old kind of standard?
When it for the pendulum to shift into the buyer's market. That's right. But with that said, I am starting to see a little bit, it's really a case by case basis. There are some properties that you'll find will sit a little bit longer in the market because people think, like going back to what I was saying, the buyers are thinking, okay, well, how much do I have to overbid to get this property? Well, a lot of them are thinking, oh, I can never afford that, but nobody has ever makes an offer on the property. You see what I mean? So everybody has this mentality that, oh, there's no way I'm going to be able to afford that property. And so it just sits on the market. And those, in my opinion, are the opportunities that is definitely available, that makes it a case by case.
Okay, we're going to move on. That's the last of the question for this subject matter for now. Let's go ahead.
So is it me again?
It's you, Nicole. Come on.
Okay, here we go. So what I wanted to talk about, of course, is financing during a pandemic and how all these boxes you see on this slide have impacted a lender's ability to lend money and a borrower's ability to borrow. So we've had our hybrid remote work situation. I mean, like basically immediately we all went into lockdown, right? So about 22% of adults relocated. So that, they're like, well, I can work remote now. I can go to Mexico, like my husband's boss. He's been working in Mexico for the last year. So we've got the relocation, which I personally think is great. I think that it was the largest scale remote work experiment in history. And we all have now this perspective on, life and where we want to live and where we want to work. Additionally, we've realized, even Patelco has realized, that a lot of people can do their job very effectively remotely and don't need to be in the office. So that has created a lot of migration, like Norlene mentioned, out of the area. We saw a big migration from the Bay Area to the Sacramento region recently, which has obviously increased prices here in the Sacramento region where I live. They're leaving those big, densely populated areas and spreading out to suburbia or smaller communities. So that did spur a lot of this buying, this demand that we're seeing. Additionally, childcare. I think a lot of us thought, oh, we can just stay home with the kids now that we work from home. Well, that's not for everybody. Some people still had to go to a place and they needed childcare, and there was no childcare available. I was on a committee at work where we were trying to figure out options for our employees about childcare so they could work in the branches. I think that also brought to light the lack of affordable childcare and the fact that it's essential for our economic and social recovery, right? So we need that, and it's also very expensive. So then we see business closures, right? The businesses started to close, or they started to reduce the work. Was it roughly 200,000 businesses closed, which then that leads to job loss and unemployment. We had 22 million jobs lost between January and April of 2020. And that then impacted people's ability to pay their mortgage payments or car payments, or, so then we started seeing these mortgage deferrals and forbearance where people couldn't make their mortgage payments. So they were calling in and saying, hey, can I put my payment off for a couple months? And that almost became a standard. If you had a mortgage, you could get a forbearance, you could get a deferral. And there were some banks and lenders who were pushing people into the forbearance deferral process, which unknowingly can affect their ability to get a loan later on. And then there was the small business PPP loans. So people who had these small businesses were getting paycheck protection program loans that would basically pay their income. So they were getting loans to pay their employees or pay themselves. That is also taken into consideration when we're looking at qualifying someone for a mortgage loan, because a lot of people that we work with are self-employed small business owners. The other thing is that I didn't necessarily put on here, but fell under mortgage forbearance and deferral, is your renters and your landlords. Landlords still have to make mortgage payments. Most of them do anyway. I did. I had two properties in Santa Rosa where I moved from, and my mom lives in one of them, and she couldn't make them, and we just told her to stop making rent payments. She couldn't afford it, and I didn't apply for relief, but we were like, well, what if we just sold the other house? So we were making decisions, right? Like how we have to still make those payments, but we don't have anybody giving us income to help offset that mortgage. So all of these things, and I talk about all of these things because eventually what happened is our investor, who we talk about, we underwrite to Fannie Mae. There's Fannie Mae and Freddie Mac are the big two. We underwrite to Fannie Mae guidelines, and they came out with these temporary COVID guidelines that give us a lot of guidance on how we underwrite and determine how we the temporary guidelines changed the process, if not all for residential lenders, but it changed how we originated and underwrote and determined eligibility on a lot of people's loans. And these orange boxes were primarily the things that were impacted, right? How we verify your employment, how you use a power of attorney, what age your documentation has to be. Usually it had to be within 30 days. Then we were looking at, okay, well, it has to be updated within 10 days. How it impacted self-employment. I think self-employment was the biggest hit. People that are self-employed, I'm telling you, they are the backbone of our communities, a lot of them, and they were hit really hard. And it became really difficult for a lot of them to sustain that income. And so when we look at a self-employed borrower, it's like a 2-year average, right? And so people had great income, and then of course it dropped off during pandemic, and now there's no more 2-year average really. So we had to take a different approach to that. Market-based assets, talking about your stock accounts, your 401ks, if you're liquidating cash as a down payment, or using your savings accounts to subsidize your income during the pandemic, that's also affecting your ability to maybe buy or refinance. And then how we actually sell a loan on the secondary market changed, which means if we can't sell the loan, we have to portfolio it. And then wait for it. What happens during all of this pandemic and this unknowing what's going on? We're in quarantine, we're working from home. We get hit with one of the biggest refinance booms in history, even greater than 2003, which is when I started in the business. I thought it was insane. So we've got this historical refinance boom, which impacted Patelco in a sense. Our business increased almost 70%, but I didn't increase my staff 70%. So we're like, oh my gosh, now this is affecting our buyers in Noraline because they want to close in 21 days. And I'm like, I can't even get an appraiser out there because they can't go on the property because the person has COVID or they're a health risk. So we just saw a lot of disturbance in our business, and it did impact quite a few of our borrowers, not necessarily in a bad way. And when I say, but wait, sounds kind of scary. There's a lot of people that benefited from refinancing and getting the lower interest rate. It may have taken them a little bit longer, may have been a little bit more documentation to go through, longer hoops. And I know it's frustrating, especially when we ask you for one more document, like, can you just give me one more pay stub? Our goal is really to get you to that point where there is a member benefit, right? There's a benefit to you. It's helping you with cash flow. It's helping you to save income. It's helping you to refinance and debt consolidate. So you're able to like breathe and have room again. It's helping you buy a new house. So these are things that we were like, working, I mean, Shada knows we were working 7 a.m. to 6 at night, and on the weekends. And our team is really committed to making sure you guys are able to get that financing. And then the last slide, just kind of really just some points about what we do. We are a retail lender. We'll lend up to $2.5 million in the state of California. So again, purchase loans. If you're looking at purchasing, some of the pros and cons here, you know, increased housing prices. We know that's happening. Lack of inventory. You may be priced out of the market. Think about some hybrid or work, you know, remote work options, or even getting back into those dense areas like San Francisco, where you may not have been able to buy before, but now you can. Refinance rates are forecasted to stay low, so don't feel like you've missed the boat. There's still a lot of opportunity to refinance. And typically it's helping you save cash flow or helping you save interest, right? Potentially doing a cash out to pay off some debt to increase your cash flow. And then equity, maybe you did refinance and you got a really low rate first. You don't want to touch that right now, but you need some access to some cash to do some home improvement. We have amazing equity lines. We'll finance up to 90% of the property, which is rare. And we don't charge you any fees on loans up to $250,000, and we'll lend up to $500,000. So keep that in mind if you need access to, you know, to cash. And the great thing is there's high appraised values right now because housing prices are going up, so are your appraised values. So there's a lot of equity out there, and rates are still low on those equity loans. So that's kind of what I wanted to share, is just, I know it's a lot of information, and I always say if you take one thing away from it, then you make me feel good. Other than that, I don't expect you to remember all of this, but just know you can contact me, reach out to me anytime if you have further questions.
Well, I have a question for you. What is your suggestion if two siblings, a brother and a sister, are trying to buy a home together? Both are unmarried. Should they sit down and speak with someone?
Yeah, that's common. We commonly see brother, sister, parents and children, roommates, boyfriend, girlfriend, partner. I mean, whatever it is, it's not just an individual or a married couple. So yeah, I mean, I would say a majority of our loan consultants, 99% of the work that we do is via phone, email, Zoom. Even before the pandemic, we're a very remote crew. You know, we can meet you in an office if you'd like, but yeah, we definitely want to have that upfront conversation with you and figure out what you're trying to do and how we can help you do it.
Thank you. All right, back to me. So I want to go over with you who's on our team. You kind of got introduced to myself, Peggy. We're the membership development. We're basically your liaison to put you in contact with all of the different strategic partners that we work with at Patelco or externally outside of Patelco. So Nicole Poole has an amazing team of loan consultants, and each of our branches are assigned with you know, very knowledgeable loan consultants to help with your purchases, with your refinances, with pulling your equity, things like that. You can visit any branch, you can call our 800 number through member services, and also take advantage of virtual branch as well. And there's a drop-down menu where you can actually select what purpose do you wish, what is your intent or nature of the consultation, so we can put you in front of the right people. We also have licensed financial investment advisors that can help you plan and help you grow your money. They are licensed to talk to you about different types of insurances, life insurance, annuities, and things like that. And each of our offices are also assigned with those licensed investment advisors. And then inside of our branch, we have partners, licensed, certified FISAP bankers that can assist you from anywhere from planning to budgeting to you know, improving your credit. They work with you side by side and you know, help you achieve those financial goals. And then we also have strategic partners, external partners. One of them you were introduced to today, which Norlene is a part of, which is the Home Advantage. They basically provide a lot of assistance and a lot of benefits for you to take advantage of, to use our agents through them to save money. With your closing, as she mentions, that you get like 20% of the commission, and they're specialized to know the area. They have all the tools and resources to do a market analysis for you, whether you're trying to sell or purchase. And then also we have what's called Balance. Balance is a tool that basically provides you free financial counseling to help you save, create a budget, manage money, pay off debt, and we can help you with that as well through Patelco. We can do, individual counseling or to help you with debt management, things like that. Okay. And then the next slide, again, this is, I'm getting asked a lot about how to contact us. And I know Nicole is the popular girl and so is Norlene. And Nicole can be contacted, that's her cell phone number. Her email address is just her first letter N, last name Poole, Poole, @patelco.org. And then Norlene's contact information, she has her direct cell phone number on there for you. And if there's any other questions aside from real estate that you wish to find the correct person, you're more than welcome to contact myself or Peggy about, and we will be gladly help you and place you in front of the right people. And secondly, if you enjoy our webinars, we have an amazing webinar, which is also talking matter all over the community, the news and everything. Many of you are aware about what's happening with auto buying. Like, I have never heard of a used vehicle, being bought. Used vehicles have equity in them nowadays. Like, I want to share with you what's happening with the auto buying industry. So please make sure that you attend our webinar. It is scheduled for June 24th, same time at noon. It's about auto buying 2021. We have amazing experts from our indirect department to go over with you what's going on with the auto buying industry right now with the rates and things like that. Peggy will be moderating that one, and we will be sending invites hopefully by next week to register for that webinar as well. At this time, our webinar regarding real estate is complete. If there is any additional questions, please feel free to email us directly, or if you'd like, we can hold on for a couple more minutes and answer some more questions if you'd like to type it into our chats. And again, thank you for everyone for joining and staying with us for this long. This was very enjoyable for all of us, and we always look forward to seeing all your friendly faces here. A lot of thank yous, everyone. Thank you for joining us and making this possible.
Let's see, if Malik, Mark, and Eric, if they're still on, we don't offer HELOCs on investment properties, just primary and seconds. I know Redwood Credit Union does HELOCs on investments. It's about the only person I know, or only lender I know right now. And then, yeah, my email address is out there, and we will send a follow-up email. Thank you, thank you, thank you. You're welcome. I need it for primary. Oh, we can help you then. Okay, Malik, we can help you.
What are your rates? What are your rates on HELOCs?
Basically, our rates are prime plus like a margin. It's like prime plus 1. So it'd be about 4.25. Again, it's the cool thing on our website is there's a loan consultant, like a virtual loan consultant, where you can enter in information and it can give you a quote. So if you want to email me your, what you're looking for, how much you're looking for, and how much you think your house is worth, and what you owe on your first mortgage, I can tell you.
I would say if anybody left has a question, they can just unmute and ask it at this point, wouldn't you think?
Yeah.
That would make it so much easier.
Ms. Davis, go ahead with your question. I just read you were.
I was trying to type, and I'm like, God, I can't even type that fast.
Do you have to keep the HELOC for a set frame time?
Set time frame. So, like, I know certain credit unions say you have to keep the money from the HELOC for 3 years. or 5 years before you, so say like you get a HELOC and then you don't use the money and you just want to give it back, or you just close that account, because the HELOC is basically like a savings account, right? That you pull from.
It's like a credit card. Think about it like a credit card on your house. So we'll, you know,
Okay,
we give you, let's say we give you a $50,000 line of credit and it just sits there and you never use it. It's a 10-year, it's a 10-year draw and a 10-year and a 15-year payback. So if you use the 50,000 and you paid it back after a year, you still have 50,000 to borrow. So it's like a credit card. If you never borrow on it, you don't have to pay anything back. And there's no requirement for you to keep the line open for a certain period of time. But our lines are a 10-year draw period, 10-year interest first payment. You can always pay more. And then a 15-year payback if you owe a balance at the end of the 10 years.
okay,
Sherry
so
T.
can you explain that just a little bit further for me? Because I'm a little confused. You said a 10-year drop period, 15-year payback. So does that mean you have to pay the loan back in 15 years, or does payments start after 15 years?
No, whatever. So let's say I give you that $50,000 HELOC, right? And
Uh-huh.
you've been borrowing it and paying the interest payments on it for 10 years. And at the end of the 10 years, you owe $20,000.
Okay,
That draw period stops. You can no longer draw off the HELOC anymore, take any money out of it. But the $20,000 now gets amortized over 15 years, and then you can pay it back at those payments for 15 years. Now, in my lifetime in mortgage, I've never really seen anybody do that. Most times it's for, you know, people will borrow it, pay it back, you know, and then, you know, pay it off and leave it there. But I don't normally see people keep these for the 10 years and then pay the payment for the 15, if that makes sense. So yeah, think about it as a line of credit. We qualify you for whatever you know, for what you can qualify for. We open up a line of credit on your account. You can borrow it. Whatever you borrow, you pay interest back. And then you can pay more principal if you want. And then it's based on prime plus a margin. And prime is set by it's the Wall Street Journal prime lending rate. We don't set it, but we do add a margin to it, which is usually 0.5% to 1%, depending on how much you want to borrow, what your credit score is, what your house appraises for. And then we pay all the fees up to $250,000.
okay, and then one final question, totally unrelated to HELOCs. How long would you have to wait if you bought a property recently to purchase another property?
How long would you have to wait for?
If you want that income, if you want to use that as part of your assets or to use it as part of your income?
The rental income on the investment property?
Well, let's say, you're using rental income from an investment property. Is it 2 years? I'm just trying to.
No, so if you have a primary home and you bought an investment property, the rental that you're getting is really offsetting the mortgage payment that you're making. So you have to qualify it as income like on your tax return, but we look at it as it is your income, but hopefully it's offsetting that mortgage payment. So we kind of look at it like that, but there's no waiting period for you to be able to, you know, to use it. We either use a rental agreement or we look at your tax returns to see what your rents are. Unless you're not getting any income from it, then we would basically qualify you with the full principal, interest, taxes, and insurance payment on that new property.
So if there's a rental agreement and rental income, that would offset your debt to income ratio, right? So you wouldn't be using that additional property as a debt. It would be more or less money.
It would be both. It would be a mortgage debt, and then you would have income coming in to offset the debt.
Nicole, I have another individual by the name of Sherry. If you'd like to go ahead and address your question, Sherry, the floor is yours.
Hi, thanks a lot for all the information. It was great.
Sure.
Yeah, I have the same question. I was wondering, maybe this is a kind of estimate question for the refinances. Is your rate comparable with the other organization? And if somebody wanted just to refinance in the area, for the primary residence with a good credit. Can you give me an estimate of refinance rate?
So
I know it's-
everybody's situation is different. It's
Yeah.
hard to just quote a rate. What we, at Patelco, we're not the highest, we're not the lowest. We are competitive within our market.
Uh-huh.
However, giving someone a rate is dependent upon a few things that I can certainly get some information from you and give you some estimates or some quotes.
Okay.
But it's different for everybody. It
Yes,
really-
yes, I have realized that. So do you guys do it, or you put people in touch with people who can do it?
So I have 12 loan officers who report to me, and they're spread out all over Northern California. So I can certainly get you in touch with someone who can work with you one-on-one.
Okay, so do you have my information? I got your email, or you want me to email you to this? This is Shada's email, or you want me to email you, Peggy?
Yeah, just
I think-
email. Sure, Sherry, email me, and I'll put my email in the chat box again.
Okay, is this
And
npoole@petelco.com? Is that you?
Mhm.
Okay.
Yep. And then I will hook you up with someone who can help you answer all your questions.
Okay, thank you, Nicole. I send you an
Sure.
email. All right,
Thank
thanks.
you, Sherry.
Thanks. Okay, bye.
Okay, I don't see any more questions coming through the chat. I don't see any more hands raised. I think we can end our webinar. Thanks for everyone joining. Have a great
Yeah.
rest of your week.
Bye.
Thank
Thank
you.
you, guys.